Hello, everyone. Welcome back to Thinkwise YouTube channel. So today, guys, in this channel, we talk about financial literacy, uh, personal finance, money management, how you can manage your money wisely, how you can manage your credit card, debit card, and all things that are related to finance. So today, my topic is gonna be about the secret behind how the rich never pay tax. The notion that the notion that the West can evade tax has been a subject of intrigue, frustration, and debate for many years. The disparity between what average citizens pay in tax and what the ultra wealth contributes can be staggering, leading to questions about fairness, legality, and the structural mechanism of tax system. This script will dive into the sophisticated strategy and loophole that enable the rich to minimize or even avoid tax, highlighting key concepts, tactics, and the broader implication for society. Understanding the basic taxation principle. So we gotta understand first what is tax, the definition, and what are the type of taxes. So one is progressive tax system, a system where the tax rate increase as the taxable amount increase. So let's say you are a lawyer or a doctor, the more money you earn, the more tax you pay because you are employee or all employee. If you are an employee, this system apply to you, the progressive tax system. That is to say, the more money you earn, the more tax you pay. The purpose designed to ensure that those who earn more pay a higher percentage of their income in tax. Understanding the basic taxation principle, marginal tax rate versus effective tax rate. In marginal tax rate, the rate applied to the last dollar earned. And then effective tax rate, the average rate of tax on total income, often much lower due to deduction and credits. Understanding the basic taxation principle, legal tax avoidance, tools and technique, tax deduction and credit. Deduction, expenses subtract from gross income to reduce taxable income. Credit, direct reduction of the tax home. Capital gain versus ordinary income. Capital gain profit from the sales of assets, often taxed at a lower rate. Ordinary income, these are wages, salaries, and other earning tax at a standard rate. So that is to say, if you own a business in real estate investment, you're gonna be paying lower tax, which is which is capital gain. On the other hand, if you are a just ordinary income, that is to say, you are an employee, you receive wage, salary, you're gonna be paying more tax compared to those that own businesses. And then the other income is deferred income mechanism. Income and but not immediately received, allowing tax to be deferred to a future period, often when the individual is in a lower tax bracket. Estate planning, trustee, trust, legal entity to hold assets, potentially reduce asset tax. Gifts or gifting, transferring wealth through gift to minimize tax estate. So these are the way most rich people avoid tax. If you're a business owner, the tax system favor more people that are own business or people that run business. On the other hand, if you're just an ordinary employee, you pay more tax. And then the use of offshore account and tax haven. Offshore account. These are people that save their money out of their native country for them to either avoid tax or evade tax. To shelter income from domestic taxation. Legality. Legal if properly legal if properly reported, but often associated with illegal tax evasion when undisclosed. Tax haven definition: jurisdiction with low or no tax rates, often offering financial secrecy. Example: Cayman Island, Swaziland, and the Bermuda. So that is to say, yeah, business people, big company, corporation, they look for country where there is a tax haven. Either they pay minimum tax for them to reduce the amount of tax they can pay in their native country. Corporate strategy: profit shifting, moving profit to lower tax jurisdiction. Transfer pricing, setting price for transaction between subsidiary to minimize tax liability. Corporate tax avoidance tactics: inversion: a U.S. company merged with a foreign company and relocate its headquarters to a lower tax jurisdiction. Benefit: reduce U.S. tax burden. R&D, which is research and development credit. Mechanism: tax credit for research and development, significantly lower taxable income. Depreciation: accelerating depreciation, writing off assets faster to reduce taxable income. The role of a tax professional and lobby. Tax professional, accountants and lawyers specialize in finding legal way to reduce tax liability. Wealth manager create strategy to preserve and grow wealth tax efficiently. And then the lobby influence wealth individual and corporation lobby for favorable laws. So these are like people like the lobby maybe to Congress so that they can pass a law that favor the wealth or the rich people. And then the impact of this is legislation often include loophole benefiting the rich. That's really, really bad. Case study and example: Apple Corporation. For example, Apple strategy utilize complex structure and tax haven to reduce its tax bill. Outcome: pay a fraction of the statutory corporate tax rate. For instance, Jeff Bezos and Amazon, who's the owner of Amazon, strategy massive reinvestment in the company, leading to low profit and tax bill. Outcome: despite immense revenue, Amazon pay minimum federal income tax. And then another example, Warren Buffett's strategy prefer capital gain over ordinary income. So initially, I already defined what is capital gain. Capital gain is a money that you get from the investment, like real estate, mutual fund, and others. Ordinary income is a income that you have from like wage, salary that you get paid from an employer. Such strategy prefer capital gain over ordinary income using charitable contribution for deduction. Outcome: effective tax rate significantly lower than his secretary. Ethical and societal implication: fairness and equity. Issue: disparity between tax rates for the wealth and the average taxpayer. Perception erode trust in the tax system and government. Economic impact: revenue loss: billion in lost tax revenue, affecting public service and infrastructure. Inequality: contribution to the widening wealth gap. Policy response: proposal wealth tax closing loophole and more robust international tax cooperation. Challenges: political opposition and the complexity of global financial system. So in summary, the ability of the rich to minimize their tax burden is a complex interplay of legal strategy, sophisticated financial planning, and the exploitation of both domestic and international tax systems. While these practices are often legal, they raise significant ethical and societal questions about fairness, equity, and the role of taxation in a just society. Addressing this issue requires a multi-fact approach, including policy for international cooperation and greater transparency. Only by understanding and confronting this challenge can we move towards a more equitable tax system. So, in a nutshell, big corporation or millionaires, billionaires, most of them have accountants, lawyers that work in the interest of those institutions for them to avoid tax. And they do it sometimes in the legal way, sometimes they don't do it in the legal way. But there's so many ways that you can do things as a corporate institution by giving charity to organization, and then by moving your company to foreign country so that you can reduce your tax. So those are the way that most big corporation, when they don't want to pay tax, they use tax avoidance. And then moreover, the US tax system favor employers than employees. Employees pay more tax because they are just an ordinary income earner. On the other hand, the employers like the company, like Walmart, Amazon, and others, these people they create jobs for other people. I think that is another reason why also they have sometimes lower tax and they also contribute to our society. Why people that are just ordinary employees they just earn and then waste the money on food commodities and other non-food commodities. So, guys, if you like this video, I'm kindly asking for you guys to like, share, subscribe, and don't forget to hit that notification bell so that you can be notified whenever I release a new video. Thank you, guys. Bye.